As things stand at present, India Inc. is feeling more confident and is willing to assume greater risks in pursuit of better rewards going forward. And that confidence is being reflected in demand across various sectors. A survey by the National Council of Applied Economic Research, or NCAER, showed that business sentiment in India was at the highest in over 2 years in the second quarter of the current financial year, as the second COVID-19 wave eased. The NCAER Business Confidence Index increased by about 80% to 117.4 in Q2 FY22 from 65 in the year-ago quarter, while it jumped about 90% on a quarter-on-quarter basis. The index was also up 13.8% over the pre-pandemic period of the second quarter of 2019-20, when it stood at 103.1. One major industry, in particular, is seeing buoyancy in sentiment. A joint report by Knight Frank, FICCI and Naredco showed that sentiment in the real estate sector had turned optimistic and hit an all-time high during the July-September period. Furthermore, the outlook for the next 6 months also remains positive due to the rapid progress in vaccination and the recovery in the economy. After a dismal score of 35 in Q1 of FY22, the current sentiment index score shot up to 63 in Q2, the best ever recorded. The future sentiment index score rose to 72 in Q2 of FY22 from 56 in Q1. This was also the highest ever recorded score in the history of the index. A score above 50 indicates optimism. A score of 50 means neutral sentiment, and anything below 50 means pessimism in sentiment. Why is this significant? Keep in mind that the real estate sector's contribution to India's GDP stood at 7% in 2019-20. But what are the conditions supporting the general optimism and the higher risk appetite? We spoke to Shubhada Rao, the founder of Quantico Research, to find out.
I think anticipatedly the business environment has improved in terms of the policy enablers getting in place in the recent months and quarters. But more importantly, from the demand side, which had got battered in the COVID era, right, for last 18 months or so, have begun to see a very strong rebound. And that has come by purely on account of the ability to vaccinate a large number of population, and therefore the risk appetite among consumer segment also recovering and reviving very strongly. In particular, I would say services is what we see a very strong rebound into. But having said, even the demand for goods has begun to improve if you look at high frequency indicators, if you look at momentum indicators in terms of manufacturing activity as well as services. So putting the demand conditions under analysis, we believe that a strong recovery in demand over the last 1 or 2 quarters, particularly since Q2 onwards, end of Q2 onwards, has instilled confidence amongst the businesses. Broadly, across the sectors, we have seen risk appetite returning in the businesses.
Boosted by the festive season, demand across various sectors is also up. According to a recent report, just before the crucial Diwali shopping period, demand for premium consumer electronics and smartphones has outstripped supply. In fact, several popular models have vanished from the market. Industry executives quoted in the report said the shortage was 15 to 30% of potential demand. Contact-intensive services like hotels and airlines are also showing signs of life. Hospitality companies, for example, had a better than expected Dussehra weekend, and now they are hoping to end the year on a positive note with brisk business expected during Christmas and the New Year. Coming to the aviation sector, rapid vaccination and easing of restrictions have been fueling month-on-month traffic growth. And, led by higher demand, airfares on certain routes are 30 to 45% higher during Diwali on a year-on-year basis. However, The key question is this increase in India Inc.'s risk appetite and the improved business sentiment sustainable?
I think in the near term, definitely till such point in time, we see a very strong rebound in the demand, which we believe is going to persist over the next few quarters. We will see that businesses look at a growth both in top line and somewhat in bottom line. Now, the reason I say somewhat in bottom line is because while interest costs may come off because of low interest rate regime and deleveraging of balance sheets, but more importantly, we have seen over the last couple of months, particularly, a very strong resurgence in input prices.
All in all, things are looking up for India Inc. However, there are two factors that need to be carefully monitored going forward. The first is how rocketing raw material costs impact companies' margins. Despite price hikes and cost-cutting measures, companies across segments such as steel, cement, paints, and FMCG are seeing a margin contraction. And secondly, despite India recently achieving the milestone of 1 billion COVID vaccine doses, the pace of COVID-19 vaccination is slowing down in the country.